Eric Mwathe with Mwathe.com, April 19th, 2016. Let's take a look at the chart for ILMN as of yesterday's close, which was April 18th, of course. And here we can see that at the close of yesterday, the stock was attempting to move back above a declining 200-day moving average. The last time it had come in contact with this line here, it stalled for a drop. And also prior to that, it had come here and tested a declining 50-day moving average and drop. As of yesterday, it was coming back to test this declining 200-day moving average. But if you take a look at the RSIs, you can see that there was some type of resistance. If you take the line connecting RSI highs, the stock was coming back to challenge that line. Also, we can see that if you take a look at this previous break here in the trend at the beginning of 2016 here, that trend break was also being tested. So there was two levels of resistance on those two lines. So the stock needed to move above those two lines if it was going to do well. And as of this morning, we can see a sharp drop in the stock, down about 25%. Right now, confirming again here that this was resistance around that declining 200-day moving average. We can also see here resistance previously confirmed around the 200-day moving average, and the two lines that were showing resistance were confirmed now with this big drop. So big drop there with resistance on that blue line, and also coming back based on this line, which was the break of the beginning part of 2016. In fact, if we test the same line, go backwards, we can see that here we broke through the line, which is the movement of the highs here in the 235 level. Also, we came and touched the same line here for this high at about 210 before this drop all the way to 130. So that line has been a tell on how the stock was going to respond. Every time it shows resistance on this line, it has been, and as of right now, we see another episode where it has touched the line, failed to move above it, and now back below it. For today, a huge drop as the daily RSI is cracking below RSI 50. And as we move below RSI 50, we tend to have a big reaction to the downside. Keep in mind that should the stock eventually move below 30.9, one can expect a continued pressure to the downside. Also, on the weekly, take a look at this 5-year weekly chart. And what you can see here is there was a break of this previous support line here. So we broke through here as of mid 2015, so off this highs here in the 200s. If you draw a line from there, which was the break line, you can see that the stock has come back to that line on 3 occasions. So it came back to the line here and stalled for the highs right there. It came here in late December and hit that line and stalled with uniform action, which is the high there. And here we can see that as of last week, it hit that line, and this week pulling back and also giving us a high here. So uniform activity rejection on those 3 previous points here give us nice highs over the last couple of tries to move higher. So again, we see that uniform activity on the RSI on the weekly was telegraphing potential for a drop. Again, moving below 50 on its weekly RSI is the reason why we are having a huge drop this week. Eric Mwathe with Mwathe.com. As always, good luck, peace, and blessings. E-A-C-S.